Hi, everyone, and welcome to the Business Tax Essentials webinar. My name is Alyssa Sawyer, and I will be your presenter for today. Just to tell you a little bit about myself, I have been with the department for 11 years. I started out as a revenue officer out of the Elizabeth City Service Center, where I answered phones, I assisted walk-ins, and I also worked on correspondence. I am now a Revenue Administrative Officer with the Knowledge, Education, and Outreach Group, where I do train internal employees as well as present webinars, such as this one, to the public. I also have here with me our host for the day. Courtney, would you like to introduce yourself?
Yes, thank you, Alyssa. Hello, everyone. My name is Courtney Curtis, and I will be your host for the webinar today. I am currently the training coordinator for the Knowledge Education Outreach Group here at the Department of Revenue, and I've been with the agency for 10 years. I greatly welcome you all today, and back to you, Alyssa.
Thank you, Courtney. So you may have noticed when you entered the webinar that you are muted. You will remain muted throughout the duration of this webinar. The way that you're going to communicate with us is through the chat. So please do submit any questions or comments that you have through the chat. Also, at the end of this presentation, Courtney will place a link in the chat for a quick survey. Please do take the time to do that survey. Let us know how we're doing and let us know if there's anything else that you wish was in this presentation. So at this time, I am going to go ahead and switch off my camera. All right, so Business Tax Essentials is an overview of common tax schedules businesses have to navigate to be in compliance with their tax obligations for the state of North Carolina. If you would like more information on a specific tax type that we talk about today, we do offer other webinars that focus specifically on sales tax, withholding, and individual income tax. We do encourage you to contact the department's customer service number or visit the website for specific questions. So we do have just a quick disclaimer. This presentation is for general information only. The presentation content should not be interpreted as specific tax advice for a specific tax situation. Some questions may require additional facts before a response may be given. Some questions may require responses from other departmental employees or employees of other agencies, and the presentation does not take into consideration draft or future legislation. So before we go any further, we first want to know if you have started your business yet, and if so, what type of business do you have or are you planning to have? Please place your responses in the chat, and Courtney will let me know some of your responses once they start coming in.
Will do. All right, Alyssa. So you started getting some responses in the chat. As far as people starting their businesses, we got a mixed crowd of several people saying yes, several people saying no, or just getting started. As far as the types of businesses, we've got online clothing store, cleaning business, coffee shop, pet groomer. Several people saying online retail. Uh, let's see, construction, people that sell furniture, consultant, health consultant, tax preparer, CPA. So a wide range of different industries today.
Okay, yeah, very large mix here. Awesome. Thank you, Courtney.
You're welcome.
So this presentation is a high-level overview and is not considered all-inclusive. The topics we will go over today include reporting your business income or loss, sales and use tax, withholding tax, and at the end, we will provide some recommendations and resources. There is a resource guide available on our website that goes along with this webinar. It provides links to different forms, bulletins, notices, and directives that will assist you. The links are broken down by tax schedule and are an excellent resource to look over after the presentation. Many of the forms we will discuss can be found on this document. Now that we have mentioned some of the topics we will be discussing during this presentation, let's dive into the first one, which is the overview of reporting business income or loss. The first thing to consider when reporting any income or loss is the business structure. The structure you select will determine the forms used to report the business income or loss. This selection is made at the federal level, and that will determine the forms used at the state level. Some of the most common business structure types include the sole proprietorship, limited liability company, or LLC for short, partnership, S corporation, and C corporation. We here at the department are unable to provide legal advice on what structure is best for your business. The Small Business Administration and the North Carolina Small Business Center Network are a couple of great resources to talk with someone about your options. So please note, if you are an LLC, how you elect to file your business income or loss is made at the federal level, and North Carolina follows the federal filing requirement. Please also note that for taxation purposes, the department uses the Revenue Act for definition purposes. At the end of the year, when you are filing your income tax return, that is when you file any profit or loss of your business. You want to make sure that you have all your supporting documentation, such as bank statements, sales invoices, purchase invoices, when you go to prepare your income tax return. As mentioned before, depending on what the business structure is and the form filed at the federal level will determine what is filed at the state level. If you file Form 1040 with the IRS and have a North Carolina filing requirement, then you will file Form D400 for North Carolina, which is the individual income tax return. If you file Form 1065 with the IRS, then you will file Form D403 with North Carolina, which is the partnership income tax return. If you file Form 1120S with the IRS, then you will file Form CD 401S with North Carolina, which is the S corporation income tax return. And last but not least, if you file Form 1120 with the IRS, then you will file Form CD 405 with North Carolina, which is the C corporation income tax return. We do recommend that when it comes to filing your income tax return that you do it electronically. It is quicker, it's convenient. Once you hit submit, you will get a submission ID number, and typically the returns get processed quicker. To see if you are required to file an individual income tax return, you may reference Form D401, which is the individual income tax instructions, or you may also reference the personal tax bulletin. You may refer to the personal tax bulletin also if you are unsure if you need to file a partnership return. And then C corporations and S corporations can refer to the corporate income franchise and insurance tax bulletin for filing requirements. So for the state of North Carolina in general, the due date for calendar year income tax returns is April 15th. If that falls on a weekend or holiday, then it will be considered timely on the next business day. And what I mean by calendar year is your typical January through December year. Some businesses are not on a calendar year, and for those businesses, the due date of the return is the 15th day of the fourth month after the end of the taxable year. Please note that some federal due dates and North Carolina due dates are different. We do have a calendar available on our website that we will talk about at the end of the presentation that will assist you with keeping track of due dates. If you are unable to file your tax return by the due date, you may file an extension, which allows an additional 6 months to file the return. The extension forms are shown here on the screen. For the individual income tax return, The extension form you will file is Form D410. For a partnership return, the extension form is Form D410P. And for S Corps and C Corps, you will need to file Form CD419. The extension must be filed by the due date of the return in order for it to be valid. So if you are a calendar year filer, the due date of the original return is April 15th. If you need to file an extension, the extension has to be filed by April 15th. I had mentioned previously that not all businesses file using a calendar year. A business, for example, may file their tax return for the period of July 1st through June 30th. We call this a fiscal year filer, and if you are a fiscal year filer, then the extension is due the 15th day of the fourth month following the close of the fiscal year. If you file a valid extension with the IRS, then you do not need to file a separate extension for North Carolina. You must certify on your North Carolina tax return that a valid federal extension was filed to be granted an automatic North Carolina extension. One thing to note is an extension will grant you more time to file, but not more time to pay. So if you owe tax on your income tax return, then you will need to pay all tax due by the original due date of the return to avoid penalties and interest. The department encourages taxpayers to file extensions online because it is easy, fast, and convenient. And please make sure you print your confirmation page to keep for your records. So we have a quick check your knowledge. So true or false, a business can file whatever type of tax return they prefer. If you'll place your answers in the chat, and Courtney will let me know your answers once they start coming in.
All right, Alyssa, so I'm showing false in the chat.
And yes, that is correct. The answer is false. Before you determine whether you have a North Carolina filing requirement, you must first determine if you have a federal filing requirement and what type of tax return you are required to file with the IRS. From there, you can determine what type of tax return you must file with the North Carolina Department of Revenue. Great job, everybody. Now we are going to be discussing potential estimated income tax payments for you or your business. For example, if you are self-employed, you may have a requirement to make estimated payments. A few more examples of folks that may have the requirement to make estimated income tax payments are individuals receiving income from partnerships or S corporations, pension payment recipients, or anyone receiving payments from tax-deferred accounts. Individuals use the NC40 for their personal estimated income tax payments, and also some business owners will use this form, for example, if you are a sole proprietor. Estimated payments are required if your tax liability will be $1,000 or more after North Carolina withholding and any allowable tax credits are taken. Estimated payments are very common in the gig economy. For example, I could have a rideshare business where no withholding tax is coming out, so I may need to make estimated income tax payments. Generally, the due dates for individual income estimated payments are April 15th, June 15th, September 15th, and January 15th. There are a few limited exceptions to the quarterly due dates, for example, for farmers, but more specific guidance on this can be found on the instruction section of the NC40 form. The instruction also has a computation worksheet that's shown on the screen to help you determine if you have the requirement to make an estimated income tax payment, and if so, it will also help you calculate the payment amount that should be paid. We do, of course, recommend that you make your estimated payments electronically. Once again, it is quick, easy, and convenient. Again, just make sure that you print the confirmation page to keep with your records. We also offer a joint webinar with the IRS regarding estimated payments. If that is something you are interested in, please make sure you check out our website and sign up for that. For businesses filing as a C corporation, the form used to pay the estimated tax is the CD 429. C corporation estimated payments are required each taxable year a corporate taxpayer has a North Carolina income tax liability of $500 or more. If the corporation is a calendar year filer, the estimated payments are due on April 15th, June 15th, September 15th, and December 15th. If you are a fiscal year filer, the due dates are the 4th, 6th, 9th, and 12th month of the taxable year. The estimated payments can be done electronically, or you can submit it by paper. Of course, our recommendation, once again, is that you make them electronically. So now we're going to talk about estimated payments for partnerships and S corporations. Used to, if you were a partnership or S corporation, the business income or loss flowed through to the partners or members' individual income return, so estimated payments were not required at the partnership or S corporation level. However, because of a new law, partnerships and S corporations can now elect to be taxed at the entity level. If a partnership or S corporation does not make a valid election to be taxed at the entity level, then you are not required to make estimated tax payments at the entity level. Partnerships and S corporations that make the valid election to be taxed at the entity level are required to make estimated payments if you expect to have an income tax liability to the state of $500 or more. A taxed partnership or a taxed S corporation is not required to make estimated payments for the first tax year it makes the election. For tax year 2023, tax partnerships will use Form NC40 PTE to make estimated tax payments, and S corporations will use Form CD 429 PTE to make estimated payments. Please do note that for both of these forms, they cannot be filed electronically at this time. So you would have to submit the paper form and send that in with a check or money order. The due dates for the estimated payments are April 15th, June 15th, September 15th, and December 15th if you are a calendar year filer. If you are a fiscal year filer, then the payments are due on the 15th day of the 4th, 6th, 9th, and 12th month of the taxable year. Now, I know that was a lot of information, and if you are planning to be a partnership or S corporation, we do have some important notices available on our website that will assist you with this. And these links are also provided on that resource guide that I talked about at the beginning. So that takes us through our reporting income or loss section. Courtney, do we have any questions before we jump to sales and use tax?
Let's see. Yes, Alyssa, we do have a question in the chat.
Okay.
So this person asked, they say, could you provide some more clarification as to when an individual will be required to pay estimated tax?
Okay, sure. So an
Thank you.
individual is required to pay estimated income tax if the tax shown due on their return, reduced by their North Carolina withholding or any allowable tax credits, is $1,000 or more.
Okay. Let's see. And they said thank you in the chat. Appreciate that, Alyssa. Thank you.
You're welcome. All right, so that was the only question?
Yes, that was the only one we had at this time.
All right. So now let's talk about sales and use tax. In this section, we will give you some resources to use. We'll determine what sales and use tax is. We will show you how to apply for an ID number, and we'll determine rates and sourcing, as well as discuss which forms to file. So first, we want to make you aware of a resource that is very beneficial to business owners. The sales and use tax bulletins are located on our website at ncdor.gov and is published online to assist with interpreting the sales and use tax laws. You will be able to find information pertaining to the taxes and forms and specific sales and use tax laws. So if you are a new business owner, or even if you are an existing business owner and you are unsure if you should be collecting and remitting sales and use tax, then this is a great resource to use to help make that determination. And also, the sales and use tax bulletins are updated annually. We also have sales tax directives that offer additional clarification to the tax law, and a directive is just additional guidance on the tax laws that are issued by a division in tax administration. To assist you in understanding what sales tax and consumer use tax is, let's review the definitions. Sales tax is a tax imposed on retail merchants engaged in business in North Carolina. It is calculated on sales of taxable tangible personal property, which is anything that can be seen, weighed, measured, felt, or touched. Sales tax is also calculated on certain digital property and certain services, including repair, maintenance, and installation services. Sales tax is paid by the consumer to the retailer, who then collects and remits the tax to the department. So you, as the retailer, will collect the sales tax from your customers and then remit that sales tax to the North Carolina Department of Revenue. Sales tax is considered a trust tax because the money is held in trust for the state. So just to give you an example, let's say you own a clothing store in North Carolina. If I come in and purchase a shirt from you, I will have to pay the cost of the shirt plus sales tax. You, as the business owner, collect and remit that sales tax to the department. And we will go over what rate to charge and how to remit the tax in just a little bit. So now that we've briefly talked about sales tax, let's now review consumer use tax. Consumer use tax is due by individuals and businesses for tangible personal property, certain services, certain digital property purchased, leased, or rented inside or outside of North Carolina for storage, use, or consumption in North Carolina. It is typically owed on purchases for use from out-of-state vendors who did not collect North Carolina sales and use tax on items shipped to locations in North Carolina for storage, use, or consumption. And consumer use tax is paid by the purchaser of the product. So an example of this is, let's say a retailer purchased a knife set for use within their business. The knife set was purchased online and shipped to North Carolina from an out-of-state vendor that is not engaged in business in North Carolina. Therefore, no sales tax was collected for North Carolina. In this case, the North Carolina retailer owes consumer use tax because sales tax was not paid on the purchase and the knife set was used in North Carolina. Understanding the definition of engaged in business is the first step in knowing if you should obtain a North Carolina sales and use tax ID. The term is defined in North Carolina General Statute 105-164.3, subsection 83. It is a pretty long definition if you do decide to look that up, but it does include maintaining an office, sample room, or warehouse in North Carolina, having someone such as a representative, agent, or sales rep operating in North Carolina in the selling or delivering of taxable goods, certain digital property or services, maintaining tangible personal property or certain digital property for the purpose of lease or rental, making a remote sale if one of the conditions of the general statute is met, including gross sales in excess of $100,000, and it also includes shipping wine directly to a purchaser in this state. And again, that's not all inclusive. For an all inclusive definition, please do check out that general statute. Once it is determined that you are engaged in business, you must register with the Department of Revenue. Before completing the North Carolina registration application, we do encourage you to review the information under the Prepare to Register link on the Register a Business page on our website. This page provides information needed to complete the registration application to obtain your account ID numbers, including your business ownership, your business contact information, the business partner or responsible person information, if applicable. And then you will also need your withholding and sales and use tax information. We will discuss the information needed for sales and use tax and withholding within this presentation. We do have available on YouTube a video that takes you through the registration process. So if you have not already registered your business, please be sure to check out that video. Once you have all of the necessary information for registration, you can proceed with completing the business registration. This form can be completed electronically or on a paper application, which is the form NCBR. We do strongly encourage you to utilize our online option. That way you are able to get your sales and use tax ID number expediently. On this slide, we are looking at the paper application, the NCBR. And that very first section, it just asks for your demographic information, such as your federal ID number or your social security number, your type of ownership, the business name, address, phone number, things of that sort. Section 3 is our sales and use tax section. And that very first question asks, when will you start selling or purchasing items or services subject to North Carolina taxes and or service charge? It is very important what date you put there because that is when you will be required to file returns. You must register for your account before your effective date to ensure you have it before you make sales. The next question asks, will your sales or gross receipts be retail, wholesale, or both? That next question says, what kind of business are you engaged in? So you will select the category that best describes your business. This next question says, what accounting method will you use, cash or accrual? If you are cash basis, then you report the sale when payment is received, regardless of when the transaction took place. If you are accrual basis, then you report the sale at the time the transaction takes place, regardless of when the payment is received. Now, these next few questions ask if you will be selling certain things such as pipe natural gas, electricity, motor vehicle leases or subscriptions, new tires, new appliances, telecommunications and auxiliary service, direct-to-home satellite, or video programming services. If you will be selling one of those items, then you will answer yes, and if not, then answer no. Please note that if you do answer yes to one of these questions, your sales of these items are subject to special rates of tax or additional taxes. So we touched on consumer use tax a little bit, and one of the questions asked is, are you registering only to remit consumer use tax? So if you do not have to remit sales tax, only consumer use tax, then you will answer yes to that question. If you will be remitting sales tax, you will of course answer no. I also want to note that the question with the box around it asking if you will sell prepaid wireless telecommunications services is the only tax schedule where your filing frequency can be semi-annually, unless of course you choose monthly. Other tax schedules you either have to file monthly or quarterly, which we are getting ready to talk about. How often you file a sales and use tax return is based on the average amount of sales tax paid each month. So if you expect your sales tax to be less than $100 average each month, then you would have a quarterly filing frequency. If you expect your sales tax to be between $100 but less than $20,000, then your filing frequency would be monthly. And if you expect your sales tax to be $20,000 or more, then you would be monthly with the prepayment. If your business is seasonal, you can select the months that you plan to be open, and those are the months that we would expect a sales and use tax return to be filed. If you do select seasonal, then your filing frequency will automatically be monthly. Now, once you register for your account, if your business needs to close an active sales and use tax account number, please do call the department or complete our online NCBN, which is our out of business notification form. Please do not stop filing without properly placing your account inactive. Otherwise, assessment of non-filed tax returns could take place. So please make sure as long as your sales and use account is active that you continue filing tax returns, even if you have to file a zero return because you don't have any sales to report for that quarter or month. So we just finished talking about the different filing frequencies on the previous slide. So now we are going to talk about the due dates for each filing frequency. If your filing frequency is quarterly, then the return and payment will be due by the last day of the first month after the quarter ends. So, for example, the first quarter consists of the months of January, February, and March. That return and payment is due April 30th. The second quarter consists of April, May, and June. That return is due July 31st. The third quarter consists of July, August, and September. That return would be due by October 31st. And then the fourth quarter consists of October, November, and December, in which that return and payment would be due January 31st. If you are a monthly filer, then the return and payment are due by the 20th of the following month. So for example, the January return is due by February 20th, the February return is due by March 20th, and so forth. If your filing frequency is monthly with the prepayment, then your return and payment is also due by the 20th of the following month. However, with the monthly with prepayment filing frequency, that has to be done electronically. Whereas with the quarterly and monthly filing frequencies, you could do a paper return. But of course, we do recommend filing it electronically. It's quick. You'll get your confirmation number. Just again, be sure you print that confirmation to keep with your records. Now, I do just want to elaborate a little bit about the monthly with prepayment. That just means that you are paying the current month's tax along with the prepayment for the next month. And the prepayment must equal at least 65% of any of the following: the amount of tax due for the current month, the amount of tax due for the same month in the preceding year, or the average monthly amount of tax due in the preceding calendar year. And for all of these filing frequencies, if the due date falls on a weekend or holiday, it is considered timely filed if filed on or before the next business day. So we have another check your knowledge. If you'll place your answers in the chat. Filing LLC started their paper selling business on January 1st, 2024. They are a quarterly filer. When would their first return be due?
All right, so I'm seeing a mixture of answers in the chat. I'm seeing April 1st, April 15, April 30th. Which one would it be?
So the correct answer for that one is April 30th, 2024. So the filing period is for January 1st, 2024 through March 31st, 2024, which is the first quarter. And remember, for quarterly, the due date is the last day of the month following the period. And in this case, that is April 30th. So the next question, if they were a monthly filer, when would their first return be due?
All right, so for this one, I am seeing February the 20th.
And that is correct. So for a monthly filer, the due date is the 20th of the following month. So that is February 20th, 2024. And that is for the filing period of January. Great job, everyone. An important form we need to talk about for sales and use tax is the E595E, Streamlined Sales and Use Tax Certificate of Exemption. This form should be issued by a purchaser when purchasing an item exempt from sales and use tax. The purchaser must provide a properly completed certificate of exemption or electronically provide the required data elements other than a signature. If any of the data elements are not provided, the certificate of exemption is incomplete and invalid. Now, a retailer is not required to verify if the purchaser's certificate of registration number or other North Carolina issued exemption number provided by the purchaser on a certificate of exemption is valid. So as a business owner, you are able to purchase items that you are going to resell to your customers tax exempt. You will complete this form to give to the vendor you are purchasing from to be able to purchase the items tax exempt. This form does not come to the department. So for number 1, you'll check this box if only making a single exempt purchase. If you are making multiple exempt purchases, you do not need to check this box. Number 2, ask for the purchaser's name, the business address, as well as the name of the seller you are purchasing from and the seller's address. For number 3, if you are reselling the items, select box 10, Retail Trade. For number 4, if you are purchasing items for resale, you would select box G and enter your resale number. Your resale number is the 9-digit sales and use tax account ID number that was assigned to you by the department. A signature is required on this form, so for number 6, you will sign and date the certificate of exemption. This form is used by multiple states, and those states are listed in number 5. We won't go into detail about that during this webinar, but instructions on how to complete the form is available on our website at ncdor.gov. To know the sales tax rate is to understand what it consists of. Generally, the sales and use tax rate is broken down into the state rate and the applicable county rate. The county rate that is collected is determined by sourcing principles, which will be discussed later. In addition to county rates, 4 counties also levy a transit tax. Please note that you may also hear the term county rate referred to as a local rate. So I may use either of those terms just so you are aware. These are the rates that apply to the sale of most items. However, a few types of items are subject to special rates. For example, boats and some food. To assist you in knowing what tax rate is levied in each county, the department has posted various tax rate charts to assist you. This slide shows 2 of those options. The image on the left provides the total tax rate by county, and the image on the right details the county portion of tax levied in each county and the effective dates of any rate changes. These charts can be used to assist in determining the tax rate to charge your customers, and I do highly recommend that you reference these charts, especially if you're going to be selling in multiple counties. Now, I do not recommend printing these charts or saving them to your desktop because, as I mentioned on the previous slide, the county rates can change. So if you print it or save it, you will not have the most up-to-date information. So how will you know what county rate to charge? It is determined by sourcing principles. The sale is sourced to the location the buyer takes possession of the items sold. Generally, tangible personal property is sourced as either an over-the-counter purchase, which is sourced to the specific business location, or it's delivered with a specified address, which is sourced to the location where the consumer or consumers receive the product. And we will take a look at examples of both of these in the next couple of slides. So here we have an example of an over-the-counter purchase. A customer purchases a physical copy of a book at your store in Durham County, and they receive the book in the store. The sale would be sourced to Durham County. You would charge sales tax at a rate of 7.5% of the sales price, and that is the rate in Durham County. So because this customer went into your store and took possession of the book in your store, that is why you would collect the 7.5% sales tax rate. This example covers transactions that are not sourced over the counter. A customer shops at your shoe store in Alamance County. Your store did not have their size in stock. The shop shipped the shoes to the customer's home in Mecklenburg County. You would charge sales tax at a rate of 7.25% of the sales price. This is the rate in Mecklenburg County. So because the customer took possession of the shoes in Mecklenburg County, that is why that 7.25% Mecklenburg County rate is charged. So now that we have discussed how to calculate the sales tax rate that is charged to your customers, the next step would be remitting the sales tax or report any use tax to the department on the Form E-500. The Form E-500 is the department's sales and use tax return that is used to report both taxes. If use tax is due on purchases, it is reported under the Purchases for Use column. Tax due on sales is reported under the Receipts column. This form must be completed even if no tax is due. So if you don't have any sales or purchases for the month or quarter, you will still have to file a tax return. It will just be a zero tax due return, letting us know that you didn't have any sales or purchases to report for that period. Now, with the exception of monthly with prepayment, this form can be completed online, mailed, or hand delivered to your local service center. The monthly with prepayment filers has to file it electronically. We do, of course, encourage you to file all of them electronically since you receive automatic confirmation that the tax return was filed. Now, if you complete the E500 and you realize that you made a mistake, then you will need to file an amended return. You are not able to file an amended return online, so you will need to go to the Department of Revenue website and complete a web fill E500 form. Once you print the form, you will have to handwrite the word amended at the top and mail that in to us so we can get it corrected. In addition to the Form E500, your business may be responsible for completing the Form E536, which is the Schedule of County Sales and Use Tax. The Form E536 is required to be filed if your business utilizes the electronic filing option of Form E500, or if your business elects to paper file but has sales in more than the county that was listed on the initial business registration. Please do note on this form, you will insert the tax amount for each county in the correct column, not the taxable receipts. We do have a YouTube video that walks you through filing and paying your sales and use tax online. That is very helpful, especially if you have never had to complete the E500 before. I do strongly recommend that you check out that video. So that brings us to the end of our sales and use tax section. As I mentioned at the beginning, we do have a webinar specific for sales and use tax. So if you need additional information about that, please do check our website to sign up for that one. So before we go any further, Courtney, do we have any questions about sales and use tax?
Let's see. I'm showing that we're getting a lot of questions about specific taxability items. Do you have any references or guidance for where they can find those types of things?
So I would highly recommend checking out the sales and use tax bulletins if you are questioning whether what you do or going to do is taxable. That is a great resource. If you read through our sales and use tax bulletins, we also have our important notices and directives. If you look through that and you still are questioning whether or not you need to collect and remit sales tax, please do contact our phone number, which we will have up at the end of the presentation so that we can better assist you.
Okay. Thank you so much, Alyssa. That was it for now.
Thank you. All right, so now we're going to talk about withholding tax basics. So as I mentioned in the sales and use tax section, the department posts resources on the North Carolina Department of Revenue website. For withholding tax, the tax booklet NC30 will give detailed instructions for employers regarding what types of income are subject to withholding, withholding tables, and filing deadlines. The withholding tax rate on wages is set at 0.1% higher than the individual income tax rate. For 2024, employers must withhold from wages at a rate of 4.6%, since the individual income tax rate is set at 4.5%. The NC30 for 2024 includes the revised withholding tables and alternative methods of calculating the amount of tax, and it's broken down by filing status, pay period, amount of pay, and number of allowances claimed. So definitely a great resource. If this is something new, you're getting ready to hire employees or you just hired employees, I highly recommend referencing the NC30 for anything withholding related. One of the first things your business needs to determine in reference to withholding is how you should properly classify workers. If your business is unsure of how to make the determination, the department would refer you to review the IRS website to assist in the determination of worker status. The IRS has published 3 categories of evidence to assist you in that determination. If you are still unclear upon review of the categories, the IRS has Form SS8, which is the determination of worker status for purposes of federal employment taxes and income tax withholding, that can be used to assist you. This will help you as an employer understand if you should classify someone as an independent contractor or an employee. Please do note that the employer or the potential worker can complete this form, and the IRS will determine the relationship. So, if it is determined by federal guidance that you have employees that are subject to withholding, an employer shall deduct and withhold from the wages of each employee the state employee income taxes payable by the employee on the wages. And North Carolina law does require withholding of income tax from salaries and wages of all North Carolina residents, regardless of where earned. There is an exception to that where withholding is not required from wages paid to North Carolina residents for services performed in another state if that state requires withholding. Withholding is also required from wages of non-residents for services performed in North Carolina, and also on non-wage compensation paid to non-residents for certain personal services performed in North Carolina. And that's just to name a few. We will talk about other individuals or entities where withholding is required on the next slide. But for an all-inclusive list of when North Carolina withholding is required, please do check out that NC30, which we just talked about a few moments ago. One last thing I'd like to mention before we do move on is, like sales tax, withholding tax is also considered a trust tax because we are trusting you as the employer to withhold from your employees' wages the appropriate amount and remit that to the Department of Revenue. So if your business contracts out labor from non-resident performance contractors or a contractor with an I-10, then this information applies to you. Businesses, organizations, or individuals in North Carolina that pay more than $1,500 per year to a non-resident performance contractor or a contractor with an I-10 must withhold 4% of that pay. And the definition of a non-resident performance contractor is a non-resident individual who performs, or a non-resident entity that provides for the performance in North Carolina for compensation other than wages, any personal services in connection with a performance, an entertainment or athletic event, a speech, or the creation of a film, radio, or television program. And an I-10, which stands for Individual Taxpayer Identification Number, is something that is issued by the IRS to people who are not eligible to receive a Social Security number. So, in addition to a non-resident performance contractor and an I-10 contractor, withholding is also required on compensation paid to someone who fails to provide the payer a taxpayer identification number, to someone who fails to provide the payer a valid taxpayer identification number, to someone who has applied for an individual taxpayer identification number, or someone who has an expired I-10 number. So if you are paying compensation to a payee, then that should be reported on the Form NC 1099-M. If a payer is required to complete a 1099 miscellaneous or 1099 NEC to report the non-wage compensation paid to a payee, then the NC 1099-M does not have to be completed. And once again, I know that's a lot of information, and we do also have an important notice regarding this as well available on our website. If this is something that you will be doing, I do highly recommend that you use that as a resource, and the link will be provided on that resource guide. So, when you determine that you may begin paying wages, non wage compensation, or pension payments, you should complete our business registration application, which again is the NCBR. And this is the same form that we discussed in the sales and use tax section. Of course, we do strongly encourage you to do it online. That way you can get your withholding tax ID quickly. And I do want to note that if you need a sales and use tax number and a withholding number, you can apply for the number, both numbers at the same time. If you do it electronically, or even if you do the paper form, you can go ahead and register for both numbers. Now, if you just need a sales tax number for right now, and then later you decide to have employees, then of course you would have to go back in and do the registration again for the withholding section. Um, but just wanted to make you aware of that. So, Section 2 of the NCBR is the withholding section. And that very first question asks, do you have employees who are subject to North Carolina withholding? It is important that you select yes to that question. Even if you don't have an employee on the day that you are registering, you might not be planning to have them until a month from now. Go ahead and select yes, because if you select no to this question, your withholding account will not be registered. So once again, you have to select yes to this question to get a withholding account. The next question, the date when wages were or will first be paid in North Carolina. Again, it's important what date you put there, because the date you put is the date that you will be required to start filing withholding tax returns. Of course, if there is a month or quarter where you do not have any withholding to report, you would just once again file a zero return. The next question, do you make a pension payment to NC residents? Just select yes or no to that. There's a follow-up question if you select yes to that one. And pension payments is like your retirement payments. The next question we talked about a little bit in the prior slide. Do you pay compensation to a non-resident entity or a non-resident individual for personal services performed in North Carolina? And then the very next question is, do you pay compensation to an I-10 contractor? So if you will be doing that, of course, you're going to select yes. If not, just select no. So next, we're going to be talking about the different filing frequencies for withholding. So if you expect that your withholding each month will be less than $250, you would file quarterly. If you expect that your withholding will be between $250 but less than $2,000, you're going to file monthly. And if your withholding is going to be $2,000 or more, then you will be semi-weekly. Now, I do want to mention with this one and with sales tax as well. I know I would get a lot of questions about brand new businesses. You know, you're not sure what your sales tax may be. You're not sure what your withholding may be. It is okay for you to select quarterly. You will just continue to file quarterly, even if your sales tax or withholding goes over to the next threshold to become monthly. Just continue filing quarterly until you receive written guidance from North Carolina that you have been switched. So if you go above the threshold for the quarterly filing, you will get notification from the department that you are being switched to monthly. And at that point, you would start filing monthly. But again, just wait until you get that written notification. And once again, with withholding, if you are a seasonal business, you can select the months that you plan to be open, and you would be required to file a withholding return for those months. So now that we've talked about the different filing frequencies, we're going to talk about the due dates. So if you are a quarterly filer, then the return and payment is due the last day of the first month after the quarter ends. So just like with sales tax, just a quick example, the first quarter, January, February, March, would be due by April 30th. If you are a monthly filer, then the return and payment is due by the 15th day of the following month. And I do want to make sure that you're mindful of if you have a sales and use tax account and a withholding account and you're a monthly filer for both, please do pay attention to the due dates because the due dates are different. Remember, if you are a monthly filer for sales and use tax, the due date is the 20th of the following month. But with withholding, if you are a monthly filer, the due date is the 15th day of the following month. So please do pay attention to that if you will have both accounts. For semi-weekly filers, this does follow the federal due dates. And that is if your payroll is made on Saturday, Sunday, Monday, or Tuesday, it is due the following Friday of the same week. If payroll is made on Wednesday, Thursday, or Friday, it is due the following Wednesday. And with all of these filing frequencies, if the due date falls on a weekend or holiday, it is considered timely filed if filed on or before the next business day. So we have another quick check your knowledge. If you'll please place your answers in the chat. What are the 3 withholding tax filing frequencies?
All right. So I'm seeing in the chat quarterly, monthly, and semi weekly.
Perfect. That is correct. So for withholding, we do have quarterly, monthly, and semi-weekly. Great job. Once you have completed the business registration process and obtained a withholding tax account ID, you are now ready to hire employees within your business. Each employee that you hire should be provided with an NC Withholding Allowance Certificate, which would be the NC4, NC4EZ, or NC4NRA form. The federal form W4 is not acceptable. This form is given to the employee by you, the employer, and advises the employer how many allowances the employee has for tax purposes. So by giving these forms to your employees, that's gonna tell you how much you need to withhold from their wages each paycheck. Now, if your employee does not give you a signed copy of one of the completed NC4 forms, then you will withhold as if the employee is single with 0 withholding allowances. And then you, as the employer, should utilize the information from your employee's NC4 and the information from the NC30 to calculate the withholding amount. We do also have a YouTube video available on how to complete the NC4. So if you're curious or if your employee isn't sure, you can reference them to our YouTube channel to take a look at that video. Since the amount of tax withheld from employees' wages was determined based on their withholding allowance certificate and withheld from each pay period, you as the employer are now ready to remit the tax withheld back to the state. The way in which you remit the withholding back to the department depends on your withholding filing frequency. So if your business is a monthly or quarterly filer, you will complete Form NC5. If your business is a semi-weekly filer, you will complete the Form NC5P. And again, we do encourage you to file this electronically. You can complete the paper form, but it's just quicker if you use our electronic services. For semi-weekly filers, the Form NC5P only needs to be completed if tax was withheld for the pay period. So you wouldn't, for semi-weekly filers only, you would not be filing any zero returns. You only file that and pay it when you have something to pay. Withholding can be paid through our e-business center. To use the e-business center, you do have to register your business with the department, obtain a withholding tax ID number, as well as create an NCID user ID and password. So it's actually something that you'll log into to be able to make these payments. It will keep your payment information. And as long as you are making payments through the e-business center, you'll be able to see the history of past payments made. So that is an option for withholding. That is not an option for sales and use tax. So please do be mindful of that. Now, if you make a mistake completing your withholding return, it can be amended by completing the NC5X or the NC5PX and mailing that to the department. The NC5PX is completed when additional withholding tax has to be paid. Any refunds for an overpayment of withholding tax for semi-weekly filers would be requested utilizing the NC5Q form, which is the next form that we're going to talk about. So if you're semi-weekly, in addition to the NC5P, you also are required to file this NC5Q. And the NC5Q form just reconciles the quarter. It compares your records with our records, so it's just an informational return. Now, some people do get confused with this form. Some quarterly filers think that they're supposed to fill out the NC5Q because it has the word quarterly in it, but that is not the case. If you are a quarterly filer for withholding, you only complete the NC5. The NC5Q is only for semi-weekly filers to complete. We do have an application available on our website for you to be able to complete the NC5Q electronically. So of course, that is our recommendation, but you can file it paper as well. If you do need to amend an NC5Q, then you will need to do the paper version and just write amended across the top. And the NC5Q does have the same due date as the federal quarterly return, which is the Form 941. So at the end of each year, each taxpayer that has obtained a North Carolina withholding account ID number has the responsibility to reconcile the year electronically by using the eNC3 application. And this is for all filing frequency, whether you're quarterly, monthly, or semi-weekly, you have to complete this NC3. Unless you terminate your business, the Form NC3 and the required 1099 statements are due on or before January 31st for the preceding calendar year. The state's copies of the Form NC 1099-M, the Federal Form 1099 Miscellaneous, or the Federal Form 1099 NEC must be included when you file your NC3. It is very important that if you are going to have a withholding account, that you do make note of this about completing the NC3 and having it filed by January 31st. As you can see on the screen, there are penalties assessed if you do not file it electronically and if you do not file it on time. There is a $200 penalty assessed if you don't do it electronically, and there is a $50 per day with a maximum of $1,000 if you are late in filing this NC3. So please make sure you're getting that NC3 in by January 31st of each year. We do have tutorials available on our website with step by step guidance. If this is something new to you, please do check that out. Also, in January, we do offer the ENC3 webinars. There's a couple of them offered. So, once again, if this is new, something that you'll just be doing for the first time, I do highly recommend that you sign up for one of those webinars. So far, we have discussed withholding responsibilities of a business owner. In this example, we will review how an employer would use the withholding tables, which are located in the NC30, to determine the withholding amount. In this example, XYZ Enterprise will be filling out its NC5 for the month of January 2024. The business has one employee whose salary is $2,300 per month. The employee's filing status is married, and the NC4EZ shows one withholding allowance. The NC30 wage bracket table shows the amount of income tax to be withheld as $48, as we can see on this next slide. So here to the left, we're seeing the table for monthly payroll period. Since this person gets paid once a month, that is why we are looking at this table. In this example, their wages were $2,300. So we're going to find that on the column to the left. Also in this example, this person claimed one allowance. So we are going to find the number of allowances at the top of the chart. And then we are going to meet in the middle to see how much tax should be withheld from this person's wages. In this example, $48 needs to be withheld. If this was the only employee the employer had, then the employer would complete the NC5 as shown on the screen by entering the amount of tax withheld for the filing period. And as you can see, the NC5 is one of our more simple forms we have here at the department. You just have to enter the amount of tax withheld on line 1. If there's no penalty and interest, then you just put the total due on line 4. Throughout this presentation, I have mentioned various due dates for different tax schedules. If you or your business fail to file and pay returns timely, penalties and/or interest may be assessed. On the screen, you will see some common penalties that can be assessed. Returns filed after the due date are subject to a failure to file penalty of 5% of the net tax due for each month, or part of a month the return is late. There is a maximum 25% of the additional tax. The late payment penalty is 5% of the tax not paid by the original due date of the return. On or before June 1st and December 1st of each year, the Secretary of Revenue establishes the interest rate to be in effect during the 6-month period beginning on the next succeeding July 1st and January 1st, respectively. To verify the current interest rate, please visit our website. So shown on the screen are just some additional actions that can take place if you don't file and pay your taxes on time. So we just talked about penalties and interest being assessed. You could be subject to garnishment, either wage garnishment or a bank garnishment. If you have a LLC, corporation, or partnership, the liability could potentially be transferred to the responsible person, which is what we call a responsible party transfer. We won't go through all of these. Of course, there's additional information on our website, but it is just very important that you do file and pay timely. And if you run into trouble, please do contact us so that we can assist you. So here we have just some general recommendations for how long you should keep your records, which includes your business income, expenses, and any deductions or credits that you claim on your individual income tax return. For individual income tax records, we do recommend that you keep those records for at least 3 years. For sales and use and withholding records, we do recommend that you keep those records for at least 10 years. So I've mentioned the notices and directives and bulletins a few times throughout this webinar already, but they are there to assist you to interpret the North Carolina tax laws. They are available on our website, and we do have some of those linked for you on that resource guide that we mentioned at the beginning. Of course, our tax laws and our tax rates are subject to change. And there is a way for you to stay in touch with us and for you to be able to get notifications when changes do take place. You can register for our e-alerts, and you do that by going to our website, which is ncdor.gov. You'll click on the tab for Contact Us. You'll then click on e-alerts and then click Subscribe. You can subscribe to multiple tax schedules or just one tax schedule. It is up to you. We all are also on multiple social media platforms, so please be sure to follow us if you are on any of these platforms. So if you ever need to contact us for personal tax matters or business tax matters, there are numerous ways to get in contact with us. We do have our toll-free number, which is the 1-877-252-3052. Agents are available 7 a.m. to 4:30 p.m. Monday through Friday. We also have service centers located throughout the state. Um, some of the service centers are not open every day. So if you do want to go to a service center, I highly recommend that you check on our website to see what day that service center will be open. And then, of course, another resource for you is our website. So as I mentioned at the beginning, we do offer other webinars such as Online Seller, the Sales and Use Tax Basics, Withholding, the ENC3 that I mentioned. We also have one for nonprofits. So you can scan the code on the screen, and that will take you to our website where you can see what's available, and you are able to sign up for those webinars. We do also offer webinars in Spanish. So if you know someone that can benefit from the webinar, please do share this information with them. So in addition to the webinars, we do want to make you aware of on-demand resources that we have on our website. The on-demand educational resources and YouTube channel are available. It does include things for sales and use tax, for individual income, for withholding. So please do be sure to check that out for additional information. I had mentioned earlier a tax calendar that we have available for you to assist you in keeping up with due dates. The Department of Revenue works with the IRS to provide pertinent information that applies to both agencies. One of our partner documents, a small business calendar, is posted on our website on our Just for Small Businesses page. The calendar, produced in conjunction with the IRS, aims to help small businesses keep up with important reporting dates for the IRS and the Department of Revenue. And this is something that is listed on that resource document that we talked about at the beginning. So that does bring us to the end of our webinar. As mentioned, Courtney will be placing a link in the chat for a quick survey. Please do take the time to complete that survey. And we thank you all for joining us during this webinar. Again, we do have the QR code available. If you are interested in other webinars, you can go ahead and scan that code to be able to sign up for those webinars. So thank you again to everyone, and we hope you have a great rest of your day.